Hello and welcome to Property Box Weekly News. I'm Simon Evison. Stamp duty changes will remain in the news for some time to come, and this week the lenders have reported a strong start to the year in the mortgage market. Many analysts and industry experts say buy-to-let investors may be driving some of the growth as they try to complete ahead of the higher stamp duty rates in April. Savills Auctioneers report a spike in interest from the buy-to-let investors and have added an extra auction in response to demand and investors scrambling to get their deals in before April 1st. The British Bankers Association reports the number of mortgages approved was up by a third year on year in January, topping 80,000 in a month for the first time in 2 years, with strong increases in both remortgaging and house purchasing. Samuel Toombs, chief UK economist at Pantheon Macroeconomics, said he expected mortgage approvals to remain on the upward trend. The expert also said that consumer confidence is high, real income gains remain strong, and mortgage rates are set to fall again in response to the decline in wholesale funding costs. Meanwhile, buy-to-let lender Paragon are confident the investor market will remain strong and that rental demand will persist. They reckon the increase in stamp duty will deter amateurs and the professional landlord will merely account for the 3% tax in their overall offer price. They also reported higher mortgage approvals in the last 3 months of 2015 compared to 2014 and expect to increase its total new loans to landlords. Overall, it seems the investor market continues to be brisk despite the changes coming up this year. And as always, your thoughts and comments are important to us, so we welcome your input. Add a comment below on how this may or may not affect your business. In the residential arena, more first-time buyers and home movers than ever before took out mortgages for longer than 25 years in 2015. The Council of Mortgage Lenders says it's mostly due to difficulty of keeping up with rising house prices. Affordability pressures have also boosted the number of borrowers taking on loans worth more than 4.5 times their salary. The Council's chief economist warns that a potential problem is building under the noses of the Bank of England's Financial Policy Committee. It is currently watching the buy-to-let mortgage market following a boom in borrowing by investors. Commenting on the residential market, the Council's representative mentioned that a potential problem has nothing to do with buy-to-let lending. Property investor and legacy education speaker Rob Tuck has this to say.
People getting home loans for more than 25 years will become a lot more common. People are stretched out to get those, to become required to get a loan, and if it has to be 35 years, that's what it will have to be. I think we're becoming more of a nation where people are going to work longer, their pensions coming later, so the term of their mortgage will be longer. I think it will be more accepted as you progress throughout into 2020 and further beyond.
And that's all from me this week. Thanks for tuning in. We'll see you next time. Goodbye. Hello and welcome. And this week the lenders will try and get their teeth in and speak the words as they're written. Higher stamp duty rates in April. Strong start to the year in the mortgage. Oh, God's sake. The Council's chief economist of the Bank of England's Financial Policy Committee. Many keep it rolling.